All right, post-trade walkthrough, less than 5 minutes. It's July 22nd, and if you're looking at the 1 hour time frame, just look at the price action right here. So from the low on July 20th, 7 p.m., to the high on July 21st, 1 p.m., and then this was today's price action right here. So I set up Fibonacci tool from the low to the high. This is the 50% and 61.8% range right here. Now, I don't want to enter a trade, nor should anyone else, based off of Fibonacci alone, right? You need to take into account, is price in a high time frame confluence, or do you just see a retracement into that level with no inefficiency substantiating the trade move? In this case, we do. Right within this 50% and 61.8% range, these two blue lines, you have this low right here. And this is an intermediate low in a 1 hour bullish fair value gap. The fair value gap is from these three candles right here. Candle 1, candle 2, candle 3. This gap right here. This was the low that entered this gap, and it didn't even fill the inefficiency 50% of the way through. So naturally, at a low or a high, let's assume that there isn't even a fair value gap. At a low or a high, price will react, grab liquidity, and temporarily or long term continue price in the opposite direction. So if you take out a low, price will temporarily, or just in general, go high, right? If you take out a low, we'll go high. If you take out sell side, we'll target buy side. If you take out buy side, we'll target sell side. It could be brief, it could be long term, that depends on the key level that we're currently in. But the fact that this low is within a 1 hour bullish fair value gap, which is a high time frame confluence, that is what drove price bullish. Not only that, when the 4 hour finished, so I took the trade after 10 a.m. and the 10 a.m. is when the 4 hour candle finishes from 6 a.m. to 10 a.m. You can see that this 10 a.m. candle closed like filling this entire inefficiency with a flat candle body, high volume, long wick. Those three factors are confirming to us that the daily bias is bullish. Not only that, if you look at the 1 hour, you could see this 1 hour bearish fair value gap that we had from 6 a.m., 7 a.m., 8 a.m., this gap, candle body slamming through the gap, no wick, full body. That is a lot of buying pressure. So that's how I determine my daily buys. And then it comes down to entries. And for entries, again, we slammed through this bearish fair value gap and even this one over here on the 1 hour, both 1 hour high time frame, candle body closing above. So that confirmed to me we're taking longs. And then for entries, very simple. I looked for a retracement. So retracement can be on the 5 minute, 15 minute. In this case, we had a 30-minute one that kind of came through. But we had this gap over here, this 15-minute gap that price retraced into. We rejected it, and you could see we had a wick go into this 30-minute bullish gap as well. And not only that, on the 5 minute, we had this 5-minute gap right here with the stop loss over here that price perfectly respected. Along with that, this is our breaker block candle on the 5 minute, this candle right here. This is our breaker block candle. So if price clears this high, there's a good chance that when it retraces, not only will it retrace into a medium time frame confluence, like a 15-minute gap, 30-minute gap, 5-minute gap, it might do so while rejecting off of this breaker block. So you see this orange zone right here, price rejected right off of it. Because think about it, large institutional players, if you want to get fundamental real quick, large players, companies who are able to be negative millions while still being in a position, they entered short positions right here. And I guess they thought maybe price could go lower and they stayed in their positions. So when price retraced back up here, ended up taking out this high, now they're in the negatives. So if you're in a short position, how do you go break even? You buy. If you're in short, you long. So when price returned back to this level that lines up to this selling pressure over here, price is now generating liquidity from the people who are in sell positions that are now buying, along with those who recognize a 30-minute bullish fair value gap and us inverting this entire structure over here on the 1 hour. So that is what drives price upward. Now, those are a few of our confluences. And then for entries, you need to make sure that price confirms the trade to you. And the way that I trade it is I look for a low time frame fair value gap for price to inverse, meaning invalidate, push right through, almost proving it very weak and confirming to us that we are no longer bearish, we are now bullish. Now is the time to enter the trade, and then vice versa if the context we're talking about is we're taking shorts. Here was my entry. I saw this 3-minute bearish fair value gap right here. Candle 1, candle 2, candle 3. I'm looking for a candle body closing above the second candle open in that sequence. So this is the second candle. This is where that candle opened. I'm looking for a candle body closing above. Over here we wicked it, still no candle body, boom. Candle body closing above this, exactly when I entered a trade, targeting a 1-to-1 ratio. See it on the 1-minute time frame here. Clean. And profit on the day, $777.